Ripple XRP. So we had a very large asset manager that actually did buy XRP. They did make an investment. However, they had to pull out of that investment. So we're going to take a look at that. And we're also going to be having a look at central bank money versus private institutions and what they are essentially scared of in terms of what we'll be seeing in the future, whether money will be going digital or not. Also, we do have some news about Egypt ditching the dollar. And of course, we will be looking at the price action of both XRP and XLM coin. So all I ask from you are two things, which is to smash that like button and to subscribe to the channel as well. So over here we have some really big news. Now this just came out today a couple of hours ago, and we have Jupiter Asset Management that had to actually scrap an investment in 21 shares Ripple XRP's ETP due to a compliance issue. So this goes to show that unfortunately they had to get rid of it, despite the fact that they did make the intention of investing within that ETP. So that is an exchange traded product. And we have over here that the assets under management is over $65.8 billion. So this is a large asset management firm, and they had to scrap that investment because of that compliance issue. So in terms of the investment, they invested $2.58 million in 21 shares at Ripple during the first half of 2023. So this was back last year. However, the investment was flagged by the company's regular oversight process and was later cancelled. And the reason for the cancellation is the divergent crypto regulation in Europe, and the fact that Jupiter's gold and silver is domiciled in Ireland, where crypto investments are prohibited in UCITS or tradable investment funds, and other European jurisdictions like Germany allow investment funds to hold crypto. So basically they were not allowed to hold these investments because of these regulations that we have in Ireland, meaning the fact that this just goes to show what would happen had we have actually had that compliance. There would have been a Ripple XRP's ETP, and that would have been $2.58 million. Now maybe they could have increased that investment, if for example they did make some sort of gains, they could have increased their percentage, just say it was roughly around about 3 or 5%, they could have increased it to 10%. And this is a problem that we are seeing within this industry. If we are able to get that compliance, I think that we will be able to get more adoption with Ripple. It's just unfortunate with the way that it has worked out. But it goes to show that these asset management firms are definitely wanting to buy up Ripple XRP in the form of the ETPs. And that obviously shows a bullish sign, right, for us in general. So over here from Mr. Man. Now this is what the private institutions are basically scared of. He says over here that the money that you hold is yours, but ultimately if you choose to play in the system, and we all do, you must recognize that your hard-earned money can be recalled at any moment. Now I personally do like to have cash. I do like to have a lot of it in the bank, but I always have to drill into my head that I need to take it out of the bank and put it somewhere else. Now whether that would be in investments like crypto, stocks, or even real estate, you really should not be holding boatloads of money in the bank, because they are the ones that are going to be using it, and really they can recall it at any time regardless. So even if you have a lot of cash on you, cash in hand as we say in the UK, you should definitely be putting it into some sort of investment. Do not just let it sit there and rot, especially with inflation. So we're going to take a look at this first.
How do you think this time is different in the form of central bank innovation? So Carmel, you're working a lot with central banks in Africa. Do you have any thoughts on why regulators are reacting differently in this decade to come than before?
So this is a very fascinating question, and this is something that we don't speak enough about, because the average person wakes up every day and doesn't think about central banks. I know I didn't before starting up tech. But the idea of central bank money plays a very unique role, and I think there is an elephant in the room between central banks and private institutions. Private institutions see themselves competing with public money. Mm-hmm. Every time you go to an ATM machine, you convert your deposit into cash. Yeah. You take it away from the bank's balance sheet, and now you have it, and it converts. You don't see it, but it converts back to the central bank's balance sheet.
Right.
The question is now, should central banks continue to play a role in the economy by providing a digital version of central bank money, mm-hmm. or should they move away and let private money be the main form of money in circulation? Mm-hmm. I think if you look at history, there is a risk, whether it's concentration risk, counterparty risk, liquidity risk, and so on, that the private sector can fail in a way that a central bank might not, right? So it's really a risk management, and whether private sector app providers, e-money issuers, banks, want to think of it this way, yes, it does impact their business and their bottom line that central bank money continues to exist. And if people want to continue to use central bank money, that they can have a diversified portfolio, but whatever money that you have in cash is not sitting on the bank's balance sheet. That's the bottom line.
Yeah.
And they would want more of it to sit on their balance sheet. But I think for the purpose of risk management, I think you're going to continue to see central bank money exist. And what we're really talking about is an infrastructure upgrade of that money. Today we have trucks and vaults and distribution, and a lot of that happens. Tomorrow you have digital vault and a click, whether to issue or remove central bank money and from the supply of money.
And this is definitely a concern for private institutions. It's basically what they're scared of. I mean, especially when you actually withdraw cash from the ATM, you're basically taking it away from the bank, because of course they use your money for investments. But still, I will be using cash for as long as I possibly can. So over here we have Egypt has now officially ditched the US dollar for trade, and it does seem like as if this is a snowball effect. And we have over here that following what happened to Russia, every BRICS country exists with a fear of imposed Western sanctions. So we know what happened to Russia. Of course, they were sanctioned. And with that, Russia have decided to essentially move away from using the US dollar in their trading activities. And moreover, the United States economy and rising debt are not the most calming statistics for countries that rely on the currency. I think that the debt is sitting at around about $33 billion the last time I checked. It may have increased, and therefore the transition to local currency dependence is the best route for all emerging currencies and global economic health. And the debt is basically unsustainable as of now, and so they're looking at other different currencies in terms of their trading activities. I know with Russia they're currently going with the Chinese yuan, so 34% of their trading activities is now actually using that currency, so maybe the Chinese yuan might come out on top. Finally, we are at 57 cents. It has been a long ride. So we are trading at 0.5731. We are up by 4.06% on the 1 day chart. We are trading at 16.55%. And we are trading at $1.7 billion. So the volume has obviously climbed up massively. We were at around about $1.2 billion in volume yesterday, so it increased quite nicely. In the earlier hours of the morning for today, we were trading at 0.5602. So even 56 cents was pretty nice. I mean, the highest that we've been to for today was 0.5778. On the 7 day chart, we are now up by 9.53%. And if we have a look at the week, you'll see over here on the 13th of February, we were trading at 0.5284. So we're in the lower range of the 50 cents. But this massive climb up has happened in the past few days. So on the 14th, we went to 0.539. So we climbed up by 1 cent. Then the next day on the 15th, we climbed up to 0.5482. So there's pretty much a 2 cent move from there. And then over here, we are now climbing up by another 2 to 3 cents. And so on the moment's chart, that only puts us down by 0.73%. Pretty much looking like as if we're breaking even. On the 18th of January, we were trading at 0.5655. And we obviously came down to that low to 0.4941 on the 1st of February. So really good recovery. Now I want to see support level for XRP at 53 cents first, because I think that we may actually see a retracement for XRP. So for Stellar XM coin, we are trading at 0.118. We are up by 2.2% on the day. For the week, we are up by 5.4%. Nearing to that 12 cent mark though. I mean, over here on the 13th of February, we were trading at 0.1111, and then we actually went to 0.116, and now towards the 12 cent mark. On the month, we are also closing in that gap. We are only down by 0.8%. Let's see if we are able to mirror this price action over here on the 18th of January, which was just under a month ago right now. I do want XLM coin to actually hold the mid-range of 11 cents. So let's see what comes out with the price action in the next couple of days. Guys, if you want daily Ripple XRP and Stellar XLM coin news, subscribe to the channel and like the video as well.